Rental income is great, right? But if you don't understand the tax game, you are leaving thousands on the table every single year. I own over rental units here in Houston, Texas, and I've helped hundreds of people to invest in Houston and beyond. Today, I'm breaking down 5 powerful rental property tax strategies that will save you money, grow your portfolio faster, and help you invest like a professional, which is what I think you are looking to be. These are the exact same tax play my clients and myself have used, from doctors, tech professional, accountant, to busy business owners, even investors out of the country like Canada, Nigeria, United Kingdom, and Australia. So if you're ready to get into it, let's go. When I bought my first rentals, I was so focused on cash flow. I didn't even think about the taxes. I didn't think about the appreciation until the tax season came around and I realized that I missed out on hundreds of legal deductions. But again, I didn't know what I didn't know. That is when I got serious and I worked with Investor Savvy CPA, which I still retain till today. I learned from the CPA, I learned from my clients' mistakes, and I started applying what the professionals actually do to save on taxes. Now I can tell you that tax strategy is baked into every single property I purchase, every single deal I do, and it's part of the first thing I walk my client through anytime we're talking about rental portfolio or rental property architecture. Because when you understand tax strategy, you can actually do a lot. You pay less tax to Uncle Sam, you can reinvest your savings, you can start a new business with the money you save, and overall you can grow your wealth faster with less risk to yourself. Now, according to IRS data, real estate investors legally pay less taxes than most W-2 earners, thanks to the tax code being built for real estate investor or asset owners like yourself, like myself. But most new investors never take full advantage of what is actually available to them because they don't know about it. So don't let that be you. Now, the strategy number 1 is depreciation. Depreciation is the only grail of rental property tax benefit. The IRS lets you deduct portion of your property's value every single year, even if it's actually going up in value, because it said depreciation, right? But it's actually going up in value. Here is how it works. Residential rental property can depreciate over 27.5 years. If your building, not the land, is worth $275,000, that is $10,000 plus in yearly tax write-off without spending a dime if you work with the right CPA. One of my clients, James, is a Houston-based CPA, uses this to offset nearly all the rental income he earned from his 4 rental property I helped him to acquire in 2021 and 2022. This strategy alone can help you wipe out your tax bill from your rental income and some of your regular earnings from your job or from your business. And that takes me to the strategy number 2, which is cost segregation. Want to accelerate depreciation and supercharge your savings? Cost segregation is what you need to do. It breaks down the property into parts like your appliances, your flooring, your roofing, and lets you depreciate some things over 5, 7, 15 years instead of you doing it in 27.5 that the IRS allow you to. You can actually depreciate everything and write it off in 1 or 2 years. And more importantly, with bonus depreciation rules still in place for certain purchases, you can write off a huge chunk in year 1, which is what I typically do on most of my properties. This is a most known move for people buying multiple properties or high ticket deal if you really want to save big on taxes. Cost segregation is an advanced strategy, but if you work with a good CPA that know what they're doing, they can definitely help you understand cost segregation and save you a lot of money. So if you are finding value in this video, do me a favor, click on that subscribe button and also the notification bell so I can let you know the next time I have a new video. I post a lot of videos on this channel to help you start or scale your rental portfolio, and I hope you appreciate it. And that takes me to my number 3, which is write off everything legitimately. As a rental property investor, your business expenses are deductible, and that includes mortgage interest, property taxes, insurance, repairs and maintenance, travel to and fro from your properties, property management like software like Hemlin, even your home office you can write it off, and even your coaching if you're getting some education or you're paying some legal fee, or your CPAs, your accountant, you can write them off. For example, I typically drive to some of my properties on a monthly basis just to see what is going on there, and all those mileage I can easily, write them as a deduction. At 27 cents per mile per the 2024 IRS rate, that can easily add up quickly if you're driving a lot to your properties. Now, I must warn you that you do need to keep a clean record, and you can use a tools like your QuickBooks or Stessa or some part of other software online that help you keep a good bookkeeping for your tax season. And this takes me to my strategy number 4, your passive loss and your active income. Here is where it actually gets interesting. If your real estate produces a paper loss due to depreciation, again, depreciation, but in reality is appreciation, you can often use that loss to reduce your taxable W-2 or your business income. Now there are incomes limits and rules, but with the right setup and the right CPA, they can help you navigate this. If you make under $150,000 per year, you can deduct up to $25,000 in rental losses. And if your spouse is a real estate professional like me, you may even be able to deduct even more. And this is why you might need to work towards becoming a real estate pro. Now, I've helped multiple clients connect to my CPA that I work with personally, and they've been able to save between $10,000 to $20,000 depending on their portfolio size every single year. If you want to get that recommendation, comment the word CPA in the comment section and I will connect you with my personal CPA. And that takes me to my strategy number 5, which is 1031 exchange that you can use to save big on taxes. Let's say you bought a rental property for $200,000 in 2022 and now it's worth $350,000. You want to sell it, but you don't want to pay capital gains, which by the way, capital gain is going away in Texas, because a 1031 exchange lets you defer all that taxes that you'll have paid if you reinvest it on another investment property. Of course, again, there's a rule around 1099. The rules are strict. You must identify a new property within 45 days and you have to close within 180 days. This is where your investor agent is very, very key. You have to work with an investor agent, an agent that really understands investment property. So if 1031 exchange is done right, you can actually grow your portfolio tax deferred. Now, you're still going to pay the taxes. We call it kicking down the can for several decades to come. I've done this personally on some of my properties, and I walk several clients through it successfully. So it's not a rocket science, but it takes some different level of skill and different avatar of an agent to help you navigate a 1031 deal. Look, taxes doesn't have to be scary or complicated with the right team. If you ignore them, they can quietly hit all of your savings, all of your returns, because let's face it, we're all doing this to build our wealth, to build our portfolio. So why would you want to leave money on the table? So I recommend you get strategic, use the rules the IRS already written. You are just simply following the rule and make them work for you, not against you. That is how I help clients to build real wealth, by helping them personally and also connecting them with other rockstar real estate professionals like my CPA. And that is how I've been able to scale my own personal rental portfolio to 7 figures. So if you want my personal rental property tax strategies and CPA, comment the word CPA and I will make that connection. Thank you so much for sticking to the end. Let's build wealth the right way, and I will see you in that video. Peace.